Bitcoin hits another all-time high today and a wall of selling pressure as it bounces off 70K for the first time ever. Who would be shorting Bitcoin with all this demand and why? Gold is also hitting all-time highs, so we put the two assets side by side for you to see which one you should hold in your portfolio. Plus, things are looking up in the US economy. Well, at least it's what Joe Biden says. So we actually look into the data to see if that's true or not. What's up, everybody, and welcome to the Bitcoin Daily Show. I'm Dante Cook with Swan.com. Today, Bitcoin made an all-time high and broke 70K for the first time ever. But as soon as Bitcoiners thought Bitcoin was ready to go to the moon, to 100K maybe, a wall of selling interest in shorts blocked Bitcoin back to 67K, like Anthony Edwards did with this game-winning block against the Pacers last night. As you can see from this chart, there's a massive amount of short selling interest, or shorts, just below and above Bitcoin's all-time high prices, which is a clear sign that we're still early. Remember, at the beginning of bull cycles, you'll see that there's a lot of short interest, or people that are expecting Bitcoin's price to go down. And when those shorts are liquidated, the price of Bitcoin skyrockets up. The opposite of that is when we're near the peak of a cycle, you'll see lots of longs or leverage longs, people that are expecting Bitcoin's price to go up. And when those leverage longs are liquidated, again, Bitcoin's price will do the opposite and drop. We're still early. And there's lots of foolish people out there like Gareth who are shorting Bitcoin. It's a surefire way to get wrecked.
Right now trading above 60,000. So just a heads up, I always try to be transparent with you guys. I added my last add to my short on Bitcoin just above 60,000, bringing my average to about, I think it's 56,405, give or take. Don't quote me on that exact number to the dollar, but that's what I remember it being, 56,405. We'll see if I get wrecked or not, as some of you guys like to say.
With ETF demand continuing to flow into the asset, shorting Bitcoin is like trying to hold an inflated beach ball underwater. I mean, just yesterday, the ETFs had 473 million in inflows. This was another monster day, considering GBTC had 373 million in outflows. And BlackRock only had 245 million in inflows. They're typically by and far the dominant leader in terms of volumes and flows for the days. But yesterday, it was actually Fidelity, who had 475 million of inflows, by far their largest day ever. What happens if we see days where BlackRock and Fidelity have $300, $400, $500 million worth of inflows? Will we see our first billion-dollar day of inflows? Why would you short this demand? A month ago when we started this show, no one would have believed you that you would have this much in inflows, especially if we saw this much outflows from GBTC on a regular basis. And just like nobody would have said these spot Bitcoin ETFs would have so many inflows, no gold bug would have imagined that the spot Bitcoin ETFs would have $680 million more of inflows on a day than gold, who continues to have outflows. And this is happening even with gold at its all-time highs. Gold bugs will tell you that gold is making an all-time high. What they won't tell you is that it's compounded less than 5% for the last decade, meaning that if you would have held gold, you would have actually lost money relative to the current inflation rates. The flipping of gold is happening in real time, and Bitcoiners are calling it first. Bitcoin is now becoming the hard money asset of choice for portfolios. After the halving, Bitcoin's inflation rate will be much less than gold's at 1.5 to 1.7%. No wonder why people call Bitcoin the hardest money on earth. Meanwhile, things are looking up in the US economy. And how do I know that? Well, because Joe Biden told me that it was in the State of Union address. The president bragged about cutting the deficit by $1 trillion. But does he not realize by 2033, the CBO projects that the deficit will be $2.5 trillion? He iterated that the U.S. economy is the envy of the world. I would call the U.S. economy the employer for the world. In February alone, jobs for native-born Americans fell by 500,000. While jobs for people born in from foreign countries grew by 1.2 million. And as if nobody was looking, the headlines will show that the economy was strong, adding 275,000 jobs. But in reality, the number of people employed actually fell by 184,000, according to Zero Hedge. Oh, and here's a chart from our friend Joe Consorti, which said that the payrolls have been revised yet again by 140,000 jobs. That's actually 10 of the last 15 months that they've been revised lower, as if no one's looking at this number. The number of workers employed in the US was 161 million, the lowest number since May of 2023. So how did the number of people employed fall while the US economy added jobs? Well, it's because people are taking on multiple jobs. In fact, 278,000 Americans took on more than one job in February alone. And 100,000 of those jobs were government jobs and waiters and bartenders. The wheels are starting to fall off of the US economy right now. Like this Boeing 737, whose wheel fell off during takeoff. Well, at least the plane didn't crash, like Coinbase's platform. And like Ray Dalio says, we need better leaders. Check out this tweet from Ray Dalio when he was at a Bitcoin halving party overseas. Sailor, sailor, sailor. We're just kidding. That's not real. He was actually at a Taylor Swift concert. And this selfie looks like it was taken by my 3-year-old when she steals my cell phone and runs around the house accidentally photobombing everybody in the entire house in the process. Okay, back to Bitcoin for a few final thoughts. A lot of people send me questions about Bitcoin to our daily@swanbitcoin.com email. So if you have questions about Bitcoin, please do send me an email at daily@swanbitcoin.com and I personally will respond. A lot of people have questions about selling. So I want to tell a little story to all of these people who are thinking about selling their Bitcoin. Today is the anniversary of the bear whale. 8 years ago, somebody sold 30,000 Bitcoin at $300 per coin, which would now be worth over $2 billion, thinking they were a genius at the time. There will be plenty of times when you feel like you should sell during this next bull market. But I implore you, don't be like the bear whale. There continues to be a massive wall of liquidity pouring into Bitcoin. Don't sell your coins to Wall Street. Remember, we're in the early innings of a multi-decade run in Bitcoin. Just think, in 15 years, they're going to say that you were luckier than Mackenzie Hughes at the Arnold Palmer Classic.
Strong left-hand grip, strong club face. Look out, there's water down there.
Ooh. Oh, off the rock. Where's it going?
It's going in the right direction. How about this?
I guess sometimes it is better to be lucky than good. But while you're still holding your Bitcoin through the next bull market, it won't be luck. You've been following Swan online on all of our social channels. You've been reading the Swan blog. You've been subscribed to this YouTube channel or signed up for our weekly newsletter. All of the links are in the show notes. So when they say that you were lucky, you actually weren't. You were prepared, like Luke List shooting this ball out of the water at the Arnold Palmer Classic.
34.
Oh, he caught a lot of ball. He's played some baseball before.
Certainly has.
Oh, yeah.
Oh, look at that shot.
Why am I sharing clips about golf? Well, because we're signing off for the week. This is Dante Cook with Swan.com. And as always, this is a healthy reminder to go touch some real grass. Be outside. And when you're not outside, have the Swan Live price chart up from the YouTube channel. And as always, happy stacking.